Hey guys, what's up? How's it going? My name is Rob and welcome back for another video on the channel. In today's video, I'm going to be giving you guys the weekly update for my dividend investing growth-based portfolio with Wealthsimple Trade. So just really quickly guys, before we get into the video, I want to just talk about a few things really quickly. As you guys can probably notice, my voice is a little bit raspy, and the reason why is because I've been sick the past week and a half or so. I actually got sick, me and my girlfriend both got sick. The good news is I am feeling better, but the reason why I haven't been super active on the channel is because I have been kind of feeling a little bit ill. The good news is I still got a bit of a cough, I get a little bit of a raspy voice, but nonetheless I feel a lot better. And the crappy thing is, generally when I get sick, I get pretty sick and I definitely feel it. But the good news is once I start feeling better, I really notice a big difference. So I do apologize for lack of updates. I do apologize for not being really active on the channel recently, but that's because I was pretty sick over the past week or so. But once again, the good news is I am feeling better, and hopefully throughout this video, my voice isn't too messy for you guys, and I do apologize if some things are hard to understand. I'm still a little bit sick, but I feel pretty good nonetheless. Alright, so let's get the ball rolling, let's get the video flowing, let's jump inside the Wealthsimple Trade portfolio and I'll give you guys an update for this week on my Canadian-based stock portfolio. Alright guys, so the first thing we're going to cover really quickly is going to be the stock portfolio update. Hopefully before the end of this video my voice doesn't give out and I can keep talking this whole time. You'll see my voice is still a little bit raspy. So once again I do apologize for that, so hopefully my voice will keep through for the end of the video. But the good news, like I mentioned earlier, is I am feeling pretty good otherwise. So our portfolio is $113,964, so just under 114. Once again, we've seen a pretty steady increase. So we have a personal account, which is our main account, or our secondary account, and our TFSA is our main account. Let's go over the TFSA first. So the TFSA is $97,000, just under $98,000. The 1 day return is 461, and keep in mind it is 8 a.m. today at the time of doing this video. Decided to do the video a little bit earlier than than I normally do, so the markets aren't quite reflective yet, but this is basically just talking about yesterday. So yesterday we got a return of $400. Over the past week the portfolio was up 1%, so we did see a bit of a gain in the TFSA overall of about $1,000. Over the past month, we've seen an increase of 4%, $3,433. Over the past 3 months, we've seen an increase of 1%. So once again, that big dip that kind of happened, it looks like towards the middle of January, we've kind of recovered from that, and we've kind of been going a little bit up and down, but steady kind of growth over the past month or so. Over the past year, we're still up 12%, and then all time the portfolio is up 16%, which is $13,000 inside of our TFSA. So, you know, it's been a bit of a rocky road back and forth, like I mentioned in some previous videos, but you know what, if you guys be consistent and you just keep investing, you will see that you will get that growth. As we've seen, you know, the past month, the portfolio is starting to rebound a little bit inside the TFSA. I'm going to click here and go over to the personal account, which is more focused on Canadian stocks. This is more of our Canadian-based portfolio, so we can see how our Canadian stocks are doing here. So over the past day, we were up 1%. Over the past week, we were up 1%. Over the past month, we're up 4%. So pretty good increase in this portfolio as well. It's more or less similar to the TFSA, just a little bit less focused on US stocks inside our personal account. Over the past 3 months, we're up 5%, and 1 year return for this is 12%, and then all time it is at 12% return. So the personal account has just been on a steady rise, up $1,682. So pretty good year for Canadian stocks overall, and we've seen that reflect inside of our personal account. So we're going to be focusing on the TFSA in terms of the stocks we're buying today. I'm going to be focusing on 2 stocks I'm going to be purchasing today inside the portfolio. So the first stock we're going to be buying, actually, just first of all, we have $200 to invest inside of our TFSA, and once again, this is just a friendly reminder if you guys don't know, or if you guys kind of forget, it's important to max out your TFSAs. It's the start of the new year, so you guys will have some new contribution rooms. Be sure to look at your previous withdrawals and whatnot from last year and do your calculations and whatnot to figure out how much contribution room you guys have. But make sure you max out your TFSAs as soon as possible. It should be your main focus because once again, it is tax-free. So that's something I am focusing on as well. So you have $200 to put inside the TFSA. So once again, I mentioned in previous videos that we are focusing on building HYLD, which is our covered call high dividend yield ETF. We currently have 48 shares, which is about $800. It's currently up 6%, so it's doing pretty good in terms of stock growth. But once again, this isn't really a growth focused fund. It's focused on dividend yield. It's got that high 10% dividend yield. And the whole purpose of this fund was to add a little bit more dividend income inside the portfolio. It currently represents about 0.83%, so just shy of 1%. I want to bring this up to be about 15% of the portfolio or so, just to get more passive dividend income, more of that higher yield over time. And then, as I get older, I'll probably, kind of go a little bit more over time. But right now, I just want to bring it up just a little bit to have some more monthly income so I can keep my growth stocks, still keep things going, but also kind of benefit for some more dividend income. So this, once again, is up 6% all time, total value of $800 inside a portfolio, 48 shares. So what I'm going to do is, since the markets aren't open yet at the time of this video, what I'll do is once the markets do open, I'm going to be putting $100 from our TFSA here inside of a portfolio. So that would be about, if I do the math here, be about 6 shares I'll be buying of HYLD today. And then the other stock I'm going to be focusing on, it's going to be a stock I haven't talked about for a little while, but I also hold inside my TFSA, and that's going to be ATD, or Alimentation Couche-Tard. So this stock recently went through a little bit of a difference in terms of changing its shares. So it used to have Class A and Class B. Now it's just Class A. So if you guys are looking it up, there used to be a ticker ATD.B. And this is the one I used to buy, but that's not a thing anymore. It's just ATD. So just type in ATD. As you guys can see here, it will give you the Class A shares, and those are the only ones you need to buy here. So once again, I'll be putting another $100 into ATD. So that's going to be about 2 shares or so, give or take. We'll probably use a fractional share to use the rest of our cash to buy ATD. But ATD, we have about 32 shares right now inside of our TFSA, total value of $1,708, and it is up 10%. This is a growth-based stock with some good dividend growth, and we're going to talk about ATD a little bit more throughout this video. And just really quickly, guys, I want to do a quick little shout out to a cool company, a cool tool that reached out to me recently to do a quick little overview with you guys. This is called Inverse. You might have heard about them before. They're a cool social media based stock, basically research tool that you guys can research different information about stocks and whatnot. So it's completely free to sign up. There's a link in the description of this video. You guys can click that link. They were nice enough to set up an affiliate program for me. So if you guys click that link, I do get paid a small commission. You guys don't have to pay anything. It's completely free to sign up. All you got to do is submit your email. It takes 2 seconds and a password, and you guys can sign up and use the tool. But what you guys can do is you can do a bunch of cool research, and you can share your research with others. So I could take, for example, if I wanted to take a peek at TD stock, I could type in TD. I could look up the ticker here. I could look at it on the TSX. There's tons of information, tons of stuff in terms of financials and whatnot. It depends on how technical you guys want to be, but you guys can see the different ticker here. You guys can see some cool different events. If you go to the financials, we can see all kinds of different things here. It's a really cool tool that you guys can use, and we can also click on notes to see what other people in terms of social media are posting about this. So you guys can share your thoughts, you can comment, you can do all kinds of cool things. So it's a cool little tool, and it is Canadian focused. I want to mention that as well. So you guys are looking for a cool Canadian focused research platform to do your stock research, to kind of share with others and kind of see what's going on. You guys can check out this tool. So lots of cool things on here. I just wanted to do a quick little shout out for you guys. Once again, link in the description of this video, completely free to sign up. Really cool tool, and I just wanted to give a quick little recommendation for you guys. So a few things I want to talk about Alimentation Couche-Tard really quickly here, guys, before we go any further. I managed to find this cool little chart off Google, courtesy of stocktrades.ca from their Y charts. I found it, so sorry for stealing this chart, but I'm just going to use it really quickly here. I found it on Google Images. So this is Alimentation Couche-Tard's revenue on a quarterly basis. So once again, I'm a big fan of companies that are always increasing their revenue. They're always growing, because the company can grow their revenue and they have a good history of stock growth. It's always a good sign. Their stock price is going to follow that, especially if they're a good company that's constantly expanding, constantly growing, and that's what Alimentation Couche-Tard is. So since the beginning of 2000, we've just seen steadily increases here in this company, and this is mostly from the company diversifying. It's from them expanding internationally. They are a stock that is really popular in Canada. They have a good business. Canada is constantly growing as a country, but they also have a lot of expansions and a lot of growth globally as well, which I think is really important. I'm a big fan of stocks that not only are set in Canada in terms of growth and they're doing well, but they're also growing well internationally or globally. I'm always a big fan of that, because you get a lot of potential and a lot of opportunity with that. And if we do a quick little peek here, we can see that the earnings forecast is to grow 6% per year. Obviously, this is just a recommendations, but if we want to look over the past 5 years, their earnings have grown 17% per year over the past 5 years. So once again, pretty good consistent growth. A lot of that did come during the pandemic, so it's a little bit, obviously that's going to mess things up, but once again, company is consistently growing, and I'm always a big fan of that. The other thing we're going to look at that I'm a big fan of is going to be the dividend growth. So obviously as a dividend investor, I'm looking at companies that are growing their dividends. Now, ATD is not a dividend company per se. They're not a company that actually has a big dividend yield. It's pretty small. It's in that 1% range. If you go take a peek here, we can see that their forward dividend yield is 0.89%. So obviously not very big, but couple things to highlight as a dividend growth based investor and as a growth based investor in general. We have a payout ratio of 14%, which is very cheap, very small. That's like pretty much nothing. That means that they have tons of free cash to go towards expanding the business, growing the company, and also increasing that dividend yield. And here's a cool little chart that's showing that dividend growth over time. So if you would have been investing in the company since the early 2000s, you would have had pretty much, you would have gotten 2 cents of a dividend yield. So obviously not that much, but look at the growth of these dividends over time. I want you to think about this compounding your account, growing over time, and just looking how much they've ramped this up over time. And if you want to take a quick peek at this, we can see the estimated yield of cost. So this basically tells us how our dividend yield is growing over time without us even putting any new money into the company. And the DGR3 is the dividend growth rate over the last 3 years. 24% per year. So imagine getting a 24% increase per year just from holding the stock shares, and that's the dividend growing. So pretty solid. Like getting a 24% raise in the dividend just by holding it is pretty solid. Over the past 5 years, it's 20%. So once again, pretty solid. And then over the past 10 years, dividend growth rate of 25%. Your dividends will double every 4.3 years. So obviously that 1% yield isn't very much, but when you factor in the stock growth, you factor in that current yield, and you factor in time, I see a lot of potential for the stock to get you some pretty good earnings. So once again, as a dividend investor, that's something to really look at. And the other thing I want to highlight really quickly before we end this little section on ATD is going to be the total returns, because that's the most important thing at the end of the day. I like stocks that have good dividend growth, good dividend yields, but I also like stocks that have good growth. That's a big thing, and it's something a lot of people don't look for, especially dividend investors. And I like companies that do a little bit of everything. So we can see over the past year, ATD has grown in terms of stock price. So this is not dividends, just stock price, 33%. Over the past 3 years, 36%. So obviously, pandemic and all that stuff changes things a little bit, but a better estimate is, overall view would be the last 5 years, and 71% growth over the last 5 years. If we include dividends, that bumps it up to 77%. So once again, pretty good returns for the stock over time, and it's just been tremendously good stock, and I think it's a very undervalued stock, and I think there's a lot of potential in ATD, so that's why I'm buying it this week. Alright guys, so I'm done talking about ATD for a little bit here. I know I went a bit on a tangent there, but I love the stock so much, and I like to highlight these things. I know a lot of this stuff is stuff I've talked about before, but I get on a lot of new viewers all the time, and I get a lot of the same questions pop up, so I kind of like to hammer these things in, and it's always a good reminder to look at some of this stuff and feel good about the stocks you're actually investing into. Here we have the dividends I've received inside the portfolio over the past little while. I don't think there's anything new other than Manulife. We did get a dividend from Manulife for $10 on the 21st, which was a couple days ago. So this would have been a new one for you guys. So this inside the personal account. I don't hold Manulife inside my TFSA anymore, but I do hold inside the personal account, and I do hold it inside my ETFs anyways. So once again, it doesn't really matter. But we have Severia Corp also paid us a dividend. We have VDY and some other ones towards the beginning of the month. So that's a quick little update on the dividends that we received inside our portfolio for this week. And if we scroll down over to our spreadsheet where I track the actual monthly dividends, we can see here that our monthly dividends have been steadily increasing. This is a sheet I like to always keep just to remind myself. A few people have asked in the comments where they can get a copy of the sheet. Honestly, guys, I might make a copy on Google Copies that you guys can copy, but honestly, this isn't like an auto spreadsheet. I just punch in the numbers myself. I made these columns myself, pretty simple stuff. Obviously, the spreadsheet is not fancy, so you guys can just I just put the name here, and I just add up my dividends, and I just click it in here. So obviously I did that, but if you guys want, I might be able to make a copy if I can figure out how to do this, I can make a copy that you guys can use, that can give you guys the chart and everything. But other than that, guys, it's not an auto spreadsheet of any kind. I have to actually manually input the information. So I just wanted to give you guys a heads up, but maybe I can figure something out for you guys. Nonetheless, here's the monthly dividend income inside the portfolio. So we had a big month in January, February $129, and then March currently at $155. And April is going to be a big month. I think we're looking at pretty much most of our stocks paying dividends. So we could say a $300 to maybe $400 month. I think it's going to be a big month, so I'm pretty excited about that. And our total dividend inside the portfolio is $2,100. And a quick little recap on the chart here that I've done. And you guys are probably asking about the chart. The chart's pretty simple. As you guys can know, I'm not really fancy with this spreadsheet stuff. It's just pretty basic things. I'm using OpenOffice, which is a free version of Microsoft Microsoft Word or Microsoft Office. So obviously you guys can tell, I'm pretty basic with some of this stuff, but basically the chart just shows you guys how the dividends have grown over time. So on the 12th month, we hit $50. On the 16th month, we hit $100. On the 21st month, we hit $150. On the 22nd month, we hit 200 or just shy of 300. And then on the 25th month, we've hit 350. So once again, steady growth that's slowly growing over time. And last but not least, guys, we'll talk about the expenses that I've been talking about for the past little while. So if you guys don't know, the whole point of this dividend investing case study is to basically eventually one day live off my dividend income. And I like to focus on personal finance on this channel as well. I haven't published too many videos other than the dividend updates recently because, like I mentioned, I have been sick. And my voice is starting to get a little bit, I'm going to need to take a break here. So I'm going to kind of wrap this up as soon as I possibly can. But here's some of the expenses that we're paying for. In my last video, I mentioned a few things, so we'll just cover them really quickly. So we're obviously focusing on our food budget, and we're focusing on the entertainment budget. This is something we're going to be spending in terms of, this could be like eating out, going for different activities and stuff. We're focusing on a budget of $50 a month. We will obviously expand this and grow this over time, but I want to focus on some important things first, like maybe our food, maybe our rent, maybe our internet bills, simple things like that. And then over time, we can grow this entertainment budget. So I think $50 is pretty reasonable. And once again, this will probably be like going out for coffee, going to fancy coffee shops, that kind of thing, which is some of the simple things that I like to do. And then going down here, we have our monthly dividend income, and I've decided to include the dividend income here for the both of us, which is me and my girlfriend. This is something I want to focus on. So we have my income here, which is 129. Looks like I didn't update it for my recent dividend, so that's from Manulife. Dividend is not included in here, so just keep that in mind. I'm gonna have to re-update that. But this is my income, and this is my girlfriend's portfolio. So my girlfriend started investing towards the end of last year, and I'm super proud of her because she is somebody who is not good with math, somebody who has no interest in math, and does not come from a background of investing just like myself. She wasn't taught this stuff when she grew up, not something that's familiar with her family at all. So I'm super proud of her, and maybe some of the stuff that I do has rubbed off on her in a sense, but she's been doing her portfolio, and her portfolio is basically a copy of mine. She just includes the ETF. So I might update her portfolio once in a while, but honestly, I'm just going to include the dividend income here. So altogether, we make about $137 in dividend last month. So on a monthly basis, I will be updating this with both our dividend income because, it is important as people. I'm learning that, working with others and being interdependent is one of the most important things in life, especially with the people that you spend your life with, like your partners and stuff like that. You can achieve a lot more together if you work together as opposed to working apart. So if you can be on the same page, if you can work together, I'm telling you guys, man, as somebody who's, done a lot of stuff independently in my life and has spent a good part of my life working on my own and trying to do things on my own, working together with others makes your life a heck of a lot easier. So that's something we're focusing on, and I'm super, super excited, and I'm super blessed that I have a partner who's on the same page and willing to work with me. So it's been super cool, and I'm super happy for that. So just want to do a quick little update on that for you guys, and I just kind of want to highlight the importance of working with the people you're with and your family and your loved ones and whatnot, because it really does make a big difference at the end of the day. Alright guys, that's it for today's video. Hope you guys enjoyed it. Let me know what you guys think in the comment section like usual. If you guys liked the video, please give it a big thumbs up. And remember, of course, to subscribe if you guys want to join me on this investing journey. Take care. Have yourself a good week. Hope you guys are feeling better. I hope you guys are feeling good. And I'll see you guys later.